Today we'll be doing a quick video covering all the different order types available at Interactive Brokers and how they can be used. If we were to jump right in, come down here below and take a look at my order entry tool, you can currently see I've got an open order ticket for Google to buy 10 shares of stock using a limit order. In order to view all of the other order types available here at Interactive Brokers, we will go ahead and click on that. Go ahead and click on the order type. And that will then open up a list of all of the other order types available to us. Some of these are going to be pretty standard, like the market order, the limit order, the stop, stop limit, and trailing stop orders. But besides that, Interactive Brokers also has a crazy amount of order types that I've never seen anywhere else. We're going to go ahead and start with the more common ones, the ones that you'll probably use most often, and then we'll go ahead and move on to the more advanced ones and how you can learn more about them. If we begin first at the top, so in this case using the limit order or LMT, this type of order can be used if you've got a very specific price in mind. If you only want to buy or sell the stock for a certain amount or better. So if we continue to use Google as the example, with the stock currently trading at 106.23 by 106.24, let's say I only wanted to buy the stock if I could get it for $100 or better. Well, in that case, we can then come down here below and specify the price. So we're going to go ahead and adjust this from 106 down to 100. And I'm now saying that I only want to buy these 10 shares of stock if Google does drop to $100 a share. This also happens to be the only order type that we're going to talk about that works in the pre-market and in the after hours. Now, in order to use it during those times, you would need to come over here to the right where it currently says day. And by clicking on that, we can then come in the menu above where it says fill outside regular trading hours. And by check marking that, that will now enable this order to work in the pre-market, regular market, and post-market today. With a pro account, this order would now be active from 4 a.m. to 8 p.m. Eastern Time. Or if you have a light account, it's going to be active from 7 a.m. to 8 p.m. Eastern Time. But again, the limit order is going to be used to set a specific price to either buy or sell the stock, and it's the only one that works in the pre-market and post-market. Next up, if we come back down here and flip the order type box over, skipping now to the market order or the MKT order type, if we go ahead and click on that one, this would now be used if you wanted to buy or sell the stock immediately and you're willing to take whatever the current price is. So if you want to get into or out of a position as fast as possible, a market order is probably your best bet. In general, it's going to be totally fine to use these for both stocks and ETFs, but just be cautious using them on options since the best price available might not necessarily be a fair price. But again, a market order will simply be used to get your order filled immediately, and it's important to remember that this will only work during the regular market session, so 9:30 a.m. to 4 p.m. Eastern Time. Next up, if we come down here and instead look at the stop orders, so the next three in the list here, stop, stop limit, and trailing stop, all of these are generally going to be used to exit out of a current position before you lose too much money. The first one we'll be talking about being the stop order or the stop market order. This will then allow us to set a very specific price that we want to exit the trade and cut our losses. So for example, let's say I currently had 10 shares at Google at around $106 a share. And in this case, what I want to do is cut my losses if Google ever drops below 100 to exit automatically and stop my losses. So what I could do is come down here below and adjust the stop activation price over from the current price down to $100 a share. Now that that's set, if this ever happens, if Google ever does drop below $100 a share, a market order is going to get submitted and sell the stock immediately, meaning I'm going to end up selling at whatever the price is after that stop is triggered. Normally, that's going to be pretty close to the stop that you set. So in this case, if I set the stop at 100, I'll probably get 100 or maybe 99.99 or 99.98. But if the stock were to move quickly, I could end up getting a much lower price than I expected. The main thing to keep in mind is that stops are not active outside of the regular market hours. So that means if the move does happen in the after hours, the stop isn't going to do anything until the market opens back up. So if some horrible news comes out in the pre-market and Google were to drop to, let's just say $90 a share, our stop is going to do nothing until the market opens back up at 9:30 a.m. Eastern Time. And as soon as it does, that stop is going to activate since it is trading below $100 a share. And because that stop is going to activate a market order, I'm going to end up filling at $90 a share, well below the $100 that I was expecting. One way around that, if you wanted to set a price minimum, is by instead using a stop limit order. So by coming over here and flipping this over from a stop order to a stop limit order. This will now allow us to set a stop price just like before. So right here, my stop is still $100 a share. But now if the stock ever hits that price, a limit order is going to get submitted to get me out. So right over here where it says the limit price, and currently it just defaults to the current price, this can now be used to set our price minimum. So let's just say I still wanted to get out of Google if it were to drop below 100, but I wasn't willing to sell the stock for anything less than, let's just say $99 a share in this example. And this right here is exactly what I'm saying. I'm still saying I want to get out of Google if it drops below 100 because I want to cut my losses, but I'm not willing to sell Google for anything less than 99. In most situations, especially if the move happens when the market is open, I am still going to be filling really close to the stop activation price, so I'll still probably fill at $99.99 or $99.98. But if a big move were to happen, if the stock were to gap down, I'm essentially saying I would not be willing to sell my stock anything less than this price. I might even be wanting to buy more shares of Google at that price. But that's going to be the key difference between a stop order and a stop limit order. Now, besides those two, besides the stop and the stop limit, the other popular stop type is going to be a trailing stop order. So if we were to come back over here to the order types menu, let's go ahead and select that one, trailing stop. This will now allow us to set a trailing amount rather than setting a very specific price. So we can now say if the stock were to ever drop by $5 or if it were to drop by 5%, sell my position. It also means that if the stock were to move in your favor, the stop is going to move up along with it, always falling behind by whatever the offset amount is. So in this example, if I were to come over here to the right and adjust my trailing stop amount to, let's just say, $5, I am saying I want my stop to always follow behind the stock by that amount. So if Google was currently trading for 105, my stop would originally go in at 100. As Google moves up, and let's say it goes up from 105 to 110, my stop has moved up along with it, always behind by $5. So in that case, my stop is now at 105, and if Google were to ever drop back down below 105, I'm going to put out a market order and get out of this position immediately. But those are going to be the more commonly used order types within interactive brokers. But if we were to come back down here and open this up again, you can see there are a whole lot of other order types within this list. Another one that you might find useful, especially if you trade options, might be the snap mid option. This is going to allow you to automatically put in a limit order at whatever the current mid price of the option is right now. So if we were to pull up an option chain for a second, let's come up here and add a brand new window, specifically coming up here and adding an option chain, which you might not be able to see because I think this is off my screen. Coming down here below and looking at, let's just say these guys, the 104 calls on Google right now. Looking here, we can see the current bid is $365, the current ask is $375, well, now $370, but the point is the spread is 10 cents wide. So if I were to build out an order ticket right now using that snap at the mid-price order, this order would go in right at $365, right in between the current bid and ask. If we get rid of that, another one that you might find useful, if we come back down here to the list of order types, is the REL or the relative order type. This will let you quickly place an order with a slightly more aggressive price based on whatever your offset amount might be. For example, if we were buying Google here again, you can see the current asking price right now is, it looks like 106, let's just say 106.20 to keep it simple. If we were to come down here below and set our relative offset amount to, let's just say 5 cents, I would be saying I want to put my order in 5 cents better than that. So if the current ask was 106.20, I'd be saying I want to buy it at 106.15, 5 cents better than the current asking price. You can also see here it does allow you to set a maximum amount as well. So in this case, I'm setting it to 99. But if you're using this, you're probably going to use none. So right here, instead of using 99, we'll just go ahead and delete that out of there. And now we'll just be using a limit price at whatever that offset amount is. Now, besides that, if we were to come back down here to the list of order types, there are also some much more advanced order types using the Interactive Brokers algorithm right here. And there's honestly way too many to go over in a single video, but if you ever do have questions about what each one of these do, you can come over here to the right of VWAP here. And if you see this little question mark icon, by clicking on that, it'll actually give you a little description of what this order would be looking for. So in this case, it says that the VWAP 1 would be looking for a best efforts algo that seeks to achieve the volume weighted average price of the stock right now, and that's how it's going to open or close the position. But definitely take a look at these and find out which ones you might find useful, and hopefully after all this, you now feel at least a little bit more comfortable with all the order types available. And I definitely have made a lot of other tutorials on interactive brokers, and I will continue to make more, so check out these next if you did find this one helpful. Otherwise, I hope you all have a great rest of your week, and I'll see you on the next one.